Hello, I'm Jeff Tennant. Trading is closed on the 8th of January 2015. I had no call for today, but I do have one for tomorrow. Let's first review what happened during the day. In the afternoon, mejt said ultimately higher prices would print, which they did, and ultimately lower prices would print, which they did. It said this drop was a false move, that prices would return to this level after this time. In the morning, mejt said ultimately lower prices would print. It gives us an ultimate target of 2051.55. Ultimate targets don't have to print soon, but they almost always do. And out of thousands of ultimate targets in the past 12.5 years, I think there are something like 3 which haven't printed at all. What's the evidence that we could start down tomorrow? Well, we do have a top of the significant trend line which connects this low, this high, and this high. Trend lines don't have to hold, but at least they offer resistance. It's now possible to see this formation either as an inverted diamond on stilts, stilt down, stilt up, half a diamond's enough, and there's resistance at the origin of the left stilt. We don't have to hold exactly here, but very often we do. To look at the green lettering, it's also possible to see this as a cup with a handle sloping up. That's not a sustainable pattern, and at some time we tend to break under the low of this handle, followed with the move under the low of the cup. The general prediction is that the market's high was hit in the last week of last year. I'm sticking with that. So the call for tomorrow is we have a new lower target, which doesn't have to print tomorrow, but often will, and that we're at a significant resistance area. There's always some element of risk when you make a prediction ahead of the employment report, but I don't think we're going too much higher from here if we go higher at all. And as usual, if the call is wrong, it's going to be pretty obvious at the open. I don't think it is, and that's today's call.